If you want to be a profitable trader, you're going to need a formula for doing that, right? It's not just about when to buy and when to sell, okay? So in this video lesson, I'm going to share with you my formula for profitable trading. If that sounds good, then hey, do me a favor. Give me a thumbs up on the video, all right? Smash that subscribe button and also hit that little bell to be notified when I go live. And hey guys, if you would like to support the channel by giving us a thanks down below, then what I'm gonna do for you, if you do that, I'm going to give you one of my trading plans, okay, $497 value. I'm gonna give it to you for helping support the channel, all right? So let's go ahead and dive into today's video lesson. We're going to talk about a formula for profitable trading, all right? That formula has to do with market posture. What is market posture? Why is it important? And how do I determine market posture to give me an edge in the market, all right? Now, I have three postures. I have a long-term posture and a long-term posture. Long-term posture is anything that is 9 months or longer, okay? 9 months or longer. Now, long-term posture, what we're trying to do is put the probability as much in our favor as possible, right? When you're deciding on whether you're going to trade bullish, bearish, or what type of strategies you're going to do, market posture is critical. And so what I got here is we're going to look at and establish our long-term posture. Now, here's how I do it. So I'm on the weekly time frame, and I just went to 5 years weekly studies. I have the simple moving average 10 and the simple moving average 40. Now, these are weekly. So all I want to know is, and the blue line, just so y'all know, is the 10, and the red line is the 40. And all I want to know is simply, is the blue line above the red? I mean, that is literally it. When the blue is above the red, long-term posture is up. You can say bullish, but sometimes when you say bullish and bearish, your brain starts to form a bias. So my mentor always just told me up. So it's up. Now, here's the deal. When the blue crosses the red, or when the 10 crosses the 40, right? Because going back here, the 10 crosses the 40. Here's what we do. So at that moment, we shift from up to neutral. Now, my mentor always told me we have a three-week filter, okay? So when the blue crosses the red, that is week 1, okay? We want to see another week go by, and then on the third week is whenever we shift our posture. So for example, when the blue crosses the red, we're neutral. We have a 3-week filter. So on the third week, as long as price action, and again, in this case, the blue stays below the red, we're now shifting to bearish. Okay. Now, this might serve you guys well for those of you who trade longer term. If you're trading, trend trades that last, 9 months or longer, it's our long-term posture is bullish. Now, this posture doesn't change very much. I mean, look at that. It's going to be a long time before the blue crosses red. So our long-term posture is bullish. Now I'm going to go back to my style set. We're going to go to intermediate posture. Intermediate. I saved it as... Just bear with me trying to find it. I think it was main study set. What happened to it? Right here, is that it? Oh, it was main study set pro. All right, just bear with me, guys. Main study set pro. There we go. Cool. Okay, so now we are going to They're really scrunched up, huh? It doesn't look that good. We're going to look at our intermediate posture. Just making sure all the wonderful lines are still there. All right, so here we go. Intermediate posture. Any trade that lasts between 4 weeks and 9 months, right? That's our intermediate posture. Now, this is a very simple one as well. Is the blue above the pink? That's it. If the blue is above the pink, which is now, for those of you that are new watching this video, the moving averages are the exponential 8, that's the blue, the 21, exponential moving average 21, that's the red, and then exponential 34 is the pink, okay? So we have the 8, the 21, and the 34, blue, red, pink. And when the blue is above the pink, or the 8 is above the 34, our intermediate term posture is up. This is very simple, right? And again, right now, our intermediate posture is up or bullish. Our long-term posture is up or bullish, okay? So obviously, our portfolio needs to be slanted towards the bullish side, which it is. It is slanted, and we've all been making profit. So that's great. Now, the shorter-term posture is the one that takes a little bit more, okay? A little bit more to get used to. Because with shorter-term posture, we are specifically looking at highs and lows. Okay, this is the one that, again, it's not as easy. So, as you guys know, an uptrend is a series of higher highs and higher lows. As long as we have highs that are higher than the previous high and our lows are lower than the previous low, then our short-term posture is up or bullish. Okay, that's pretty simple. We don't care about the moving averages. This is all about highs and lows. Now, if we do not clear the high and we roll over, maybe forming a ascending triangle, symmetrical triangle, our posture shifts to neutral. Okay, neutral. And again, when we're aligning our strategies with market posture, this can dictate whether you buy calls, whether you do credit spreads, whether you take profit earlier, swing high, stuff like that. But it's very important. Now, if it breaks, as long as this low holds, it's going to stay neutral. Okay, it's going to stay neutral. Now, we're not as quick to shift straight to bearish. For example, when it breaks to a low, price action breaks to a low, we shift from neutral to bearish to neutral. Okay, now that's kind of a mouthful, but we're leaning a little bit more towards the bearish side, but we're still neutral. We're not full-blown bearish yet. We're neutral to bearish. And again, when you're doing your strategies, if your market posture is neutral to bearish and you start to load the boat on a bunch of bullish trades, your probabilities are going to go down, right? Maybe you shift your thinking to more short-term, right? Swing, trade from support to resistance. Maybe don't go for those flag targets. Maybe those 80% on your vertical, you shift to 50%. And we'll do a lot more talking about that for sure. But I just kind of wanted to establish market posture because this is something that I need to be talking about every single day. Now, when we pull back up, if we test, again, this was support. The technical analysis rule is old support should become new resistance. So we're expecting price action to come back up to resistance and then roll over. As soon as we close below the low of the high day, you guys know that rule, right? We close below the low of the high day, that forms the high. And as long as this high is lower than this high, now we shift to bearish. Now there is a caveat. We use the 8 exponential moving average, the 21, and the 34. So if price action breaks back above the moving averages, so let's say there's moving averages right here, and it closes, then we're back to neutral. All right, everybody, I hope you're enjoying today's video so far. Hey, do me a favor. If you are, and you haven't done so yet, give me a thumbs up on the video. I really appreciate it. It doesn't cost you anything. It helps support the channel. Hey, and make a nice comment if you are enjoying today's video. All right, so let's go ahead and get back into the video lesson. Okay, but lots of times those EMAs, when you break below the EMAs and they hook back up, they can act as resistance. And if it rolls over, we're full-blown bearish. So we don't want to be putting on a bunch of bullish trades when our posture is bearish. Okay, and so if we look at the S&P right now, because again, this is something that I'm going to talk about every day, every single day. And this is the way that Dave Johnson taught me. Okay. This is the way he taught me. Now, this was a different one, guys, because look, here was a low, here was a high. So we were bullish at that moment. But what happened was it broke down to a lower low. When it broke down to the lower low, we shifted to neutral to bearish. Neutral to bearish. But then look, it closed back above the EMAs. So I told y'all last week that that automatically put my posture back into neutral. So what can we do when our posture is neutral? So if you're trading a squeeze trade, and this is so important, and I be very honest with you guys, I did not pay much attention to this. I didn't pay much attention to this when I was learning how to trade, and it cost me. Even though my mentor would take the time every single day to talk about this, I did not pay much attention to it. Looking back at it now, he didn't just do it for his health. He did it because it was important to him. He's been trading for over 50 plus years. He's still in the game. So when I'm doing this market posture analysis, you don't have to determine your market posture the same way I do. The thing that I'm just trying to, again, bring to light is you need to establish a market posture. However you do it. You need to align your strategies with market posture. So right now, when this happened, I shifted to neutral. So if I'm going to trade a squeeze, that's a time where maybe you should just focus on shorter targets, support to resistance, and don't go for the full 1272 extension. Okay, Charles says that's why I focus on my pivots and buy signals. They give him market posture. It's very important. Now, maybe when your posture is neutral and you see a fantastic bull flag or a squeeze setup, maybe you don't buy a call. Maybe now you shift more into credit spreads. Okay? More into credit spreads. Also, when you're neutral, see the rules, and again, I'm going through this because again, I really want to talk heavily about this. Whenever our rules on a vertical spread is 50% within 5 days. That's no matter what, regardless of posture. Now, the key is after the 5 days, we shift to 80%, right? 80%. And then we've got obviously our exit rules, but I'm talking about our target. Now, something you could adapt. If your market posture is neutral, maybe you don't shoot for the 80%. Maybe you shoot for just the 50%. And there is nothing wrong with that. Or maybe you take half off at 50% and you let the other half run to 80%. Again, there is no right or wrong answer. I'm just trying to say that when your posture is neutral, it might take a lot longer to hit our 80%. And sometimes taking the profit and applying that to another quality setup, there's nothing wrong with it. Okay? I took profits today on quite a few at 50%. Because my posture right now is, well, let's keep going on posture. And again, I really appreciate y'all listening because this is a very important stuff. Now, I am neutral. And the only reason I was neutral, guys, if it would have made a higher high, which means the low was above this low, I would have stayed bullish. The only reason I shifted to neutral is because of this lower low. That's the only reason I would be bullish right now. Now, what's going to cause me to shift back into bullish posture? Here's what's going to cause me. Here's what's going to cause me to do that. That is the resistance high. We now have broke back through the resistance high. So my posture now, which was neutral, is neutral to bullish. It's still neutral, but neutral to bullish. Okay, there's kind of that caveat. And I don't want to just be switching back and forth from bullish to bearish to bullish to bearish. So that's why, he taught me, don't be as quick to change your posture. Neutral to bullish. So what does that mean? Again, you can look at different strategies, trade to different targets. What's going to cause me to switch back into full bull mode? Well, we're at a higher high. We're neutral to bullish. When it pulls back, as long as it stays above this high, it can pull all the way back down to here and then bounce. Right? And then bounce. What I mean by bounce, close above the high of the low day or the inside / following day. That is going to cause me to switch back into bullish. So then, if I'm in bullish, maybe now when I'm doing call trades, I let them go to the full target. When I'm doing vertical spread trades, I let them go to the full 80%. This is so important. This is going to save your butt if you align your trading strategies with your market posture. You are increasing your probabilities of success. And I know this because my mentor, he did this every single class before he did anything. Is what's your posture, okay? The short-term posture is the hardest one to get, but right now we're neutral to bullish. So if you want to take profits earlier, that's totally cool. Swing high, swing low, totally cool. All right? So hopefully you guys enjoyed that little video lesson on market posture. We'll be talking a lot more about market posture, but I just wanted to do this little quick video because, again, it's important to me. It was not important to me, and I sucked for many, many years, okay? And a big part of it was because of this. I was not aligning my strategies with the overall market. 60 to 70% of the stocks will follow the broad market. You need to pay attention to the market. All right, everybody. Hopefully you enjoyed today's video lesson. And if you did enjoy the lesson, do me a favor. Hit the like button below, share it with your friends, and subscribe to the channel. Oh, and by the way, check down below in the description. There's a link on how you can get my latest book, Trading Part-Time, completely for free. Don't forget to take a look at my next video coming up right there. We know you'll enjoy it. All right, everybody. We'll see you in the next video lesson.